Good morning, ladies and gentlemen in the US. Hello in Europe and good evening in Asia. Welcome to our weekly trading show every Monday here on Traders Yard. I would like to introduce my fellow traders that are with me today. At first, we have Gilbert, CEO of xTasyTraders and trader himself, of course. The second guy is Rudi. Rudi born, living most of the time in Japan actually, although he's a German trader as well. And me, myself, Martin Gersch, I'm also futures and stocks trader from Germany, based in Düsseldorf. Okay, so let me share my screen for you. It's this one. Okay, that's the first slide of our weekly trading show, but we need the second one. And the second one is be careful of risks. Trading, of course, is a risky business, and what's very important is what we are showing here today is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security mentioned. We are no financial advisors. And of course, we are traders ourselves, so it is very likely that we hold positions in the stocks we are showing, or at least plan to build up any positions. Please have this in mind as well. Okay, so let's kick off the show. We have several stocks prepared for you already, but let's start with an overview of the markets. I think this would be the best because we are in a very, very tricky situation at the moment. So let me show you the Russell 2000 future. And this is a very, very important place where we are at the moment, around 2,100 points. We can see the Russell made his yearly high already in March. And so already in March, and then began trading sideways for a very long time. This is several months of sideways movements. And in the end of June, it looked quite bullish, quite good that the market could manage to break out above the last high here, above 2,370 points, but it got sold off again, and now it's selling off the fourth week already. And we're at a very, very important level. So if this level is going to break today in the session, we have a valid downtrend again in the Russell 2000. So this would be the first of the important indices in the US showing a valid downtrend. And often the Russell is the first one to show us where the overall market is going to move to. What's important as well, for several weeks now, we have a declining number of stocks in the U.S. market that can manage to trade above their 50-day moving average. At the moment, it's less than 30% of the whole U.S. stocks that are trading above the 50 moving average. And we can see this in the S&P as well. You can see it here on the daily chart. Today, we have a big sell-off in the market. We are already trading below the last low, so that's not really a good sign. And I think the most important time of this week would be midweek. I guess the sell-off is steepening a little bit more, and when we come to this range down here, around 4,220 points, maybe up to 4,240. That's the big support level in the S&P 500, and we also see the 50-day moving average is somewhere in this range at the moment. So this would be the very important point for the market if the buyers would be able to step in again and bring us something like a retracement in the market, a new up move in the market. if they don't manage to stop this sell-off around 4,220 points, we could be moving down to 4.1 or somewhere around here, 4,040 points as well. So as we can see, the markets are in a process of maybe rolling over to a downtrend, and so that's the reason why today I got 3 stocks for you. I'm going to show the first 2 of them, and then we're going to switch to the other traders, and if we have time in the end, we have a third stock prepared as well. But only one of them is prepared for trading the long side, and 2 of them are prepared for trading the short side. So that's a very important point where we are now. Markets may be rolling over into a downtrend, so we have to act accordingly and not building up long positions no matter what. If we see markets are going to be weak, it is sometimes good to be prepared for the short side as well. But in the end, let's start with the one I got for the long side, and that's the stock of Moodys. I think everybody knows what Moodys is doing. It's a rating company. So they're giving advices to private traders, giving advices to institutional traders. And what we can see here is that the revenue stream is very, very strong. It's rising year over year, and also the earnings stream rising year over year. We have 18, 19, 20 quite good earnings. And if we take a look at the quarterly earnings as well, we see the last quarter was really a great quarter. Record revenues, record earnings, big earnings beat. So I think it's not for no reason that the stock is up quite a bit, but it's in an interesting situation at the moment. We see over the long term, it's outperforming as the industry as well as the overall market. 3 years, 5 years, big outperformance above the market. And lastly, over the shorter term time frame, 30 days and 7 days and 90 days as well, we see this big outperformance as well. So let's just take a look at the chart. The chart of Moodys, it's MCO. So here you see what's interesting. Let's take a look at the pre-market prices. Bid is around 300, ask is around 380. Okay, that's a big spread. So what's important here is this range down here. Let's see, it's this one here. This last range, this is like a high tide flag near the all-time highs. So we take a look at the weekly chart and we see Moodys was trading sideways for quite a long time and then broke out March this year and made a big up move. We came here from $300 up to $380 at the moment. So this is in terms of percentages, we have a move here around 25%. And now we are trading at the highs, and we see this high tide flag. And we have seen markets have been weak over the last few days and also over the last few weeks, but we see Moodys was not weak at all. And if I like anything in the markets, I do like strong stocks that are strong even though the market, the overall market is very weak. So these are normally the best buys in the market because downside seems to be limited. Even though markets are selling off, the stock is holding up very, very good. And if the overall market would be gaining momentum to the upside again, these companies would continue their outperformance and be up even more. So this is why Moodys for me today is interesting for the long side. And as we take a look at the monthly chart, yeah, we see it's not only a trading stock or a stock that's good for trading at the moment. It's also a stock that's really great for investing. But for investing purposes, I would like to see a retracement, a setback. The stock has moved far away from this 10-month moving average here, or it's 12-month moving average. So it's the yearly average, and it moved away quite a lot, as we could see it here, and afterwards there was a retracement. At this point here, far away from the average, made a retracement. So for investing purposes, I would wait until we see a retracement. Maybe, let's take a look at a weekly, maybe at least somewhere around here, 330, 335, somewhere around here. This might be a good point to entry for a long-term investment. But if you want to trade for several days, this might be a nice breakout of this bull flag. Okay, so the second one I got is the stock of American Airlines. So let's take a look at this stock of American Airlines. What's important here is, I guess you all know it, COVID was really, really bad for all the airline companies, and travel restrictions kick in again at the moment, and that's what we see at the markets. Airline stocks, travel stocks down big at the moment. I guess what they're anticipating is maybe another lockdown in the US, maybe another lockdown in big parts of Europe, maybe another lockdown in some parts of Asia as well. So the time is not good for airline stocks or travel companies or something like that. And we see it in the financials as well. Yeah, see revenues nearly was cut more than in half. And as you can see, in 2019, there have been a lot of revenues, but relatively few earnings. So these companies don't have a big margin. They don't have a big profit margin. And for companies that do not have a big profit margin, if revenues come down this fast and are cut in more than half, they are not able to earn any dollar, but they're making big losses here. We see it in the quarterly earnings as well. Still a lot of losses in the last quarter as well, losses. They reduced the losses by reducing their costs, because as you can see, the revenue has been the same, $4 billion in the quarter, but a little bit less losses. So this was cut at the cost side and not better business. So that's a little bit tricky at the moment for these companies. And what I like at American Airlines is the place where the chart or where the price is at the moment. We take a look at the weekly chart. We can see the big retracement from the COVID crash down here. The big retracement came to a very, very important level with these last lows here. These last lows, the market tested the last lows, was sold off, tested this level again, and was sold off again. So what we have here now is a classical double top pattern. And this double top pattern is completed if the price is moving below 1966 here. And we had a very weak last week. So I guess at the beginning of this week, prices are going to move below 1960 and could reach something around 1650-ish, somewhere down here. This is support actually. Let me see, this is support. And we also have a small support here from these last weekly highs. So $16.50 down to $16 is what I guess would be possible for the stock of American Airlines. It moved below the 10-week moving average. RSI is turning down really strong. And on the daily chart, yeah, we can see we had here something like a bear flag as well on the daily chart. Week close on Friday below the bear flag, and I guess there's more room to run to the downside for American Airlines. Okay, so let's switch to, I'm not sure who's next. Is it Rudi or is it Gilbert? I don't know.
I think it's Rudi.
Okay, I would be ready if it's the best choice for you, Gilbert. I can do it now.
Yes, this is fine.
Amazing presenter. Please share your screen and show us what you got for today.
Okay, give me a second. Okay, here we go. I have two stocks here. We heard before, Martin already said that the market is maybe turning currently. We have some indications that especially the vast majority of the stocks is not really strong in the current situation. Most of them are turning down or turned down already. They're quite low. It's only a few strong stocks keeping the market up. And so it's really important to have both sides in mind. So I switch off my cam so that you can follow the screen way easier and see this in full screen. I have Packaging Corp of America here in my case, which is giving us a clear indication that the market is already in a really bearish mode, not pushing forward anymore. We had a really strong move before that. This is from March 2020, and we had some really typical structure here in the market, a 5-wave pattern to the upside. It was a really nice one. So, there were some breaks here, a 3-wave, and you can easily see even in the big picture we had a 3-wave pattern here as a corrective pattern. This is really, really typical. If you have some shaky movement or something like an ABC pattern, this is indicating, this is a counter trend, and when the market is overshooting the intermediate high here in the middle of the break here, for example, then the market is in the mood to continue because the buyers are still there and they are not trusting the bear market. But the last few days or weeks, let's say like this here from May, they were really strong on the downside. There's no ABC pattern here. It is a really strong move here to the downside. And now we are in an uptrend. And you can clearly see this uptrend is not really convincing compared to the downtrend here. This makes or gives me the feeling that this is the strong side here. And this part here is only the weak side. And if the up move here is very weak, then when the market is plunging through the intermediate lows, which could be located roughly around here, and if you're a little more conservative, you can take this one as well. But if the market is plunging through these levels here on the lower end of the trend channeling, for example, then this opens a new door for the trend. And the last trend was a weak trend. It was a strong trend to the down market. That's the right idea behind this. It is a strong move to the downside, a weak to the upside. So we are thinking of selling the market short when the market is breaking through this level. So in our case, we decided we will take this intermediate low here, which is also indicating a trend channel break here. So I think there's a good chance that the market will continue. How far can we expect that the market will go down? For that, we have several things we can keep in mind. Some people are thinking, okay, let's stick with the Fibonacci retracements, for example. We can just draw it here from the lower end to the upper end, which is giving us some nice levels here, for example, roughly 123, or it can be 113, even here around the 15 level, which could be a really nice support level because of the intermediate high here. But we also have some here. This was already tested and the market turned around this one. So this is over. This is not the main target, of course, anymore, because this is this is over already when the market is breaking here through this level here. So these are some quite nice levels here. We can also, if there's a continuation, you can also think of, okay, let's say this is the last strong downtrend here, and if we continue the same size, which would also lead us roughly 115, a little bit below that. So I think we have a good idea that the market can reach this level easily, and we'll find some support here. Also this level here, if you just measure the last part of this corrective pattern, it's also a quite strong move to the downside. If you compare this to this one, you would also reach around this level here. So in my eyes, we will open a good door for the short market here when the market is plunging through this level. It is exactly currently at the level of 134.38 when the market is going through this today maybe. Then it is open for a good move to the downside. Roughly 115 I think is a good target for this. So I'm merely checking the price movement. I'm not interested in this company. I'm not interested in is there a reason behind that or something. I'm just checking what are the market participants doing here. Are they convinced by the market? Are they doubting, or are they panicking? And this is not a convincing idea for a bull market. So this is giving me the strong idea that the market needs another continuation, and very often the market is doing this in the same size. It's not exactly the same size all the time, but you can see if you have one part after an ABC pattern or a break, you will have another part which is roughly the same size. In this case, it's a little bit smaller, so don't be surprised if the market is turning a little bit earlier. But I think the raw idea is that we have a good chance when the market is reaching this level that the market can come back here to this level. But this is another story, and we can talk about this in the near future. So this is my first thing. It's a short trade in this case for a weak market environment currently, but I also have something for the bull side. I'm not absolutely sure that the market will go down because we have seen so many situations like this in the past, and the market always came back. So I think it's always good to have at least one or two bullish ideas or buying ideas here in the market as well. And I see something on a lower time frame with Stanley, Black&Decker, which is giving us on a lower time frame a good indication that there's a chance for a continuation to the upside, because you can see this here on a daily chart. We had a strong move, and you can see the structure, the internal structure of this movement way better here in the 4-hourly chart, for example, or an hourly chart as well. If you see the intraday structure here, you can see this is a more or less a strong move to the upside here. At the end there was a little bit of something like an ending pattern. We call this an ending diagonal, for example. But now we are coming back, and this is also coming back into the area of the typical support levels for a corrective pattern, which is roughly in this box here. It's not necessarily exactly there, but it's roughly a good orientation that an ABC pattern reaching the level below the 38.2 and above or around 61.8. It can be a little bit below, it can be a little bit higher than this. We had the situation before when the market did not reach this level exactly, but roughly this area is a good idea to search for some turning points. In our case, because the market is falling currently and not giving us any typical supports here, of course you can try to find some Fibonacci clusters here as well. If you try to combine some levels here and find out is there some interesting support level. For example, we have some roughly around 201 and a little bit more, 202 roughly. This can be the, I would say Gilbert would call it a trampoline or something, where the market can turn around and jump back to the upside. In my case, I'm not so much focused on this level here, because it's not, the numbers are not given now, because I want to see some support first before I enter the market. But when the market is going through this level here, which is the intermediate high from the 15th of July, when the market is going through that level, I would expect that the market will continue the same way like we did here, from the low wherever it is, and give us a 100% minimum movement to the upside, which would lead us well above the 220 level, and maybe is giving us a little bit more so that we can overshoot the 225 high we had here in May. So I think when the market is going through this level here, we have a good idea that the market has enough power to turn around or keep this momentum here, and even would attack something around this level or even a little bit higher, but we will see that. But this is on a lower time frame. You can see this. This is not indicating that the market is necessarily running for the next few months. To the upside, it's more something like a shorter time frame trade, or you can additionally use this for an easy entry into a market. Of course, you can apply this to all other markets as well. So if you want to have a long-term investment in some markets, but they are suffering of high prices and not knowing, shall I enter at the very moment, shall I wait a little bit more? If you see some pattern like this, you can easily say, okay, this is at least for the next few days or maybe weeks a good indication that the market can continue a little bit higher. Again, the same size like we had here. You can say, okay, I'm thinking of a movement like this. I forget my taking profit here and keep the position running, trailing my stop to my entry and say, okay, what can happen? I'm safe. I have a free lunch. There's no danger of losing a lot of money anymore. So when the market is continuing way higher, it's all good. If not, yeah, I had my chance to enter at a nice price here, and in the hope that I could have a bullish long-term perspective with this one. So these are my two stocks. I'm not absolutely sure we have time because Mike is not with us currently. So I would hand over to Gilbert at the very moment. If you have time, I could give another stock if you like, but we can do this at the very end of the show if you like. So Gilbert, if you want to take over.
Yes, I'm taking over. Give me a second. I'm just assigning me to the presenter. So let's see if you can see already. Okay, yes, yeah. So yes, let's wait. Maybe Mike is coming in a few minutes. Otherwise, I would also have a third stock or a second stock to present. I'm starting first with Bitcoin. Never discussed this in our shows, so I just take the chance to talk about the Bitcoin, how I see it, and what I read out of these charts now. I'm just switching off my camera. Give me a second. So, okay, good, yeah. So let's start as always with the monthly chart. We know Bitcoin, nothing, a long time nothing happened here. It went into the side. Even there was quite a lot of movement relatively seen. But yes, we already had in the past, in 2017, this up move and came back here. And basically, from the location point of view, it is always the SMA 20 is a good mark where turnarounds can happen. In the past, we had this phase here where we had the up move, then big down move, then we had basically a reaction on the SMA 8, around the SMA 8. It's not always directly, but I always take this as a mark there. And then this got rejected and the market went back to the SMA 20 and even further. So this is now, is when we look at the current situation here on the monthly chart, is that we again had this up move here. There is a nice trampoline pattern in this 2 months here. Then the trampoline, as the market is crisscrossing the SMA 20, is then correcting back. Then at the SMA 20 there is a single bar or double bar retracement, and this is very often a sign that then you see afterwards this moves. Yeah, so we had this move up to 65,000 around, and then this extreme strong correction on the monthly base back to the SMA 8, but it did not have any reactions or too much reactions there. It just closed at the SMA 8 here, the monthly chart, and then fell through the SMA 8, and currently we are hanging here somehow in the air between the SMA 8 and the SMA 20, and this is looking into the history also. There is a big potential to get back to the SMA 20, also to get back here to the SMA 20, maybe even further. But yes, this is a good mark now, good target at around 22,000, 23,000. get back and then waiting for maybe some reversals. Looking at the weekly chart, we see also here that market went up. Here we had again this on the weekly chart a good move up here. Came back to the SMA 20. We had this reaction here on the SMA 20, but then it fell through and it stopped at the outer Bollinger Bands. Here we had somehow a stairway pattern, but this also got rejected and the market went to the side, and here we see the reaction on the SMA 8 down into the short direction. What you also see here in this at around 22,000 is the EMA 130, which is always quite a good mark where markets are turning, have a good potential to turn around. And watching it now at the daily chart, we had quite good signals in the past. Here, for example, so here at the left side, yes, so the location points are quite well working also with Bitcoin. But now we have here the situation that the market came down. We had here basically a reaction at the SMA 200, a retrial at the SMA 200. It went up to the outer Bollinger Bands, and here we see reversal. This is basically a stairway, a short stairway pattern, and where the market got rejected and then it went back. And now we are in a somehow not really sideways phase. It's already a bearish phase here, and it does not look really strong. So the market does not get any strong indication at this point here. And looking now at the location point lines on the weekly and on the monthly, we see here this location point cluster, which is the monthly SMA 20 and the weekly EMA 130. And there, I would say there is a good potential to reach this target here. Of course, it might happen. So currently, in the moment, there is no real low risk entry possibility. I would wait that the market is coming down here, maybe get back somehow, and if there is at this point somewhere around at the SMA 20 a short retracement, there is a possibility to get in and then to wait until the market gets down to these levels here. So yeah, not the best signs for Bitcoin, for cryptos at all. But yes, this is how the situation currently is, and we will see how the market will react when it really hits these marks at around $23,000. Okay, so this is the first analysis. Second one, a quick look into the ES, just to also see my decisions, what I've felt with the stocks I'm introducing. As Martin already also mentioned, that the indices, stock indices are weak, giving some indications to maybe go into a bearish phase. We see it here. I already assumed that at this moment here we are going to get down into a bearish phase, but now it looks even yes, stronger, that we really have a chance that the market is, or the possibility that the market is going down quite a bit. We see here on the monthly chart, this is what I'm always mentioning, what I was mentioning in the past already. This is the climatic distance indicator, and if we look at this, we never had in the past, we were never that climatic like we are currently. So this, the climatic is always how far the market is away from the SMA 20. So this never happened in the past, that we are so far away. So this means that we have really big potential to get back to this mark here, 3,550, something like this. Okay, good. This is now the ES. Let's get into the stocks. I would like to show first into Intel. So what do we see here in the monthly chart? So Intel was going up here long time, and since about February 2020 we are in a sideways range here. With us here, Intel got rejected at this relative high with a strong down move. As it seems, the SMA 20 did not stop the down move, so we are still with bearish monthly candles here. And looking at the situation at the indices, of course, this can increase the possibilities that Intel is also going further into the short direction. Weekly chart does not really say too much. The only thing what I can say here from the location point of view is that market went up, came down, and turnarounds are quite often happen at the outer Bollinger Band. So if we would have to had seen a move down here and a reversal at the Bollinger Band, at the outer Bollinger Band, for me it would be an indication that the market is strong. But here it happened that we just had a EMA 130 reaction, but it did not come back to the outer Bollinger Bands. We came back here to the SMA 8, and we are still here now in a bearish phase, and even the last week candle is reversal, short reversal by the SMA 8. So this seems to me it's a sign that it continues into the short, and also from here, from the daily chart, that we have this down move here, then again here crisscross around the SMA 20, coming down here, coming up here, here at the outer Bollinger Bands there is somehow a stairway pattern, and it points into the short direction. And now we see this candle here, and this candle is for me the entry candle, so I'm quite curious how the market will open today. But this is basically the entry candle, so if the market is somehow in between this candle here, there is a good point to get the entry order here and the stop order at high of this candle. And target, of course, there is a target here. We are in a sideways range, basically. Target could be somewhere around 45 in this direction. So this could be a good possibility to get into this stock like this, and with our possible target to at around 45, something like this. Okay, so this would be Intel. The next one which I've prepared is one I had already in the past, a few weeks ago. This is NOC, which I already discussed, and where a few weeks, I think 2 weeks ago, I already mentioned it, that there is a good chance to see this in to go into the short direction. It did not work out at this moment because we had this reaction on the outer Bollinger Band. I'm just opening the monthly chart because my indication that NOC, Northrop, Grumman, has a big short potential was this candle on the monthly chart, which is again here on the relative highs. It got rejected here, and so it did not break through. And now we saw last month this reversal bar on a monthly base. And yeah, what is here now possibility or the current situation? So here we see the potential that there might be on a daily base, on a weekly base, I do not see really anything, but on a daily base, we see here also this rejection or the resistance here, sorry, we see the resistance here at this moment. The market went now to the side here, went to here to the side, and now here we see this candle, and this is the trampoline pattern. So we had some crisscross around the SMA 20. Here we see the crisscross pattern at the SMA 20, and this was already a good indication to get into this market. So currently, if you're not into this market yet, there is the following possibility: either to take this one, and here there is the good target. It's a good target because this is the SMA 20 of the monthly chart, and this could be a good target into the short direction. So if currently there is a possibility to get into here at the low of the current candle at about 360, put the stop to 374, or what also is a possibility is, of course, to wait how the market is working out here. Maybe get down here, get back, and if you see a retracement candle at the SMA 20 here, there is would also be maybe a better possibility to get in, because if you get in here, and you see here now the risk situation will be much better in terms of order size to get in here. So if your location point trading is always getting in as tight as possible into the market. So if the market would make a small correction back to the SMA 20 here, and you see a double bar retracement, single bar retracement, there would also be a good possibility to get in a little bit later, but maybe with a better risk reward ratio. Okay. So this is the analysis from my side. Bitcoin, Intel, and Northrop, Grumman, Corp. Yeah, so I'm done.
Well,
Martin, are you taking
Thank
over?
you very much, Gilbert. So let's see, I think we still have time for one more thing I could show you. And well, the third one I have prepared also for the short side. As you could see, there are several traders at the moment who are thinking that the markets might be rolling over. We will see. What I'm expecting is, as I said, maybe a steepening of the sell-off, maybe a little bit more downside today, maybe tomorrow as well, but somewhere in the middle of the week I'm retracing a bounce. I'm awaiting a bounce in the market, but maybe this bounce would be a good situation to get rid of some long plays and to build up some more cash positions, or maybe start a little bit to trade on the short side. So, and for trades on the short side, I also have one today. This is Chevron. Chevron, of course, I think everybody knows Chevron. Chevron engages in integrated energy, chemicals, and petroleum operations. It's a company that operates worldwide. That is actually quite good. It's good if you have a company that has its operations over the whole world. So if in one place business is not too good, then they do have other places where they could do good businesses. But Chevron has one problem. The stock is, of course, related to the price of the energy commodities. And all the energy commodities are under pressure over the last days. I think the most important one is crude oil. I do have the crude oil chart here. And as we can see on the weekly chart, if my program manages to get back on track, I could show you. Yeah, there we have it. So on the weekly chart, you can see that crude oil topped at around $77. And what is very important about this level is that it topped here in 2018 at the same level as well. And you see what happened afterwards. The price came down from $77 down to $42. I don't think that we see such a big down move this time, but it is a big double top that we do have here in the market. Big double tops do have the possibility to see bigger downside in the market, but I guess maybe around levels of 60-ish, $61, $62. This could be the price crude oil is heading to. We lost the 10-week here, so prices moved below the 10-week moving average, not too good. We see that the RSI topped as well, and if I take this one a little bit bigger here, then we would see that we had rising highs in price. On the same time, we had declining highs in the RSI index and also declining highs in my Gush trend index. So this is a bearish divergency, not too good for the market, and so every time you see something like this in the market, you have to be prepared for the downside. And so I guess maybe the down move in crude oil is not over yet. There are several factors that are weighing on the crude price at the moment. First of all, it's the continuing rise of COVID cases, as I said before, the fear of maybe more lockdowns to come. This would reduce like one side of the oil trade. The demand would slow down, and so this is weighing on the prices. And the second one is like we see carrying traveling restrictions again. So this is reducing the demand as well. And also the OPEC Plus is not really sure how to act in cases of limiting the output of the oil production. So there might be more oil production in the near future, and this is weighing on the price as well. And as we said, Chevron is dependent on the oil price and is dependent on the energy prices. And we could see over the last few years, revenues have been turning down, earnings have been turning down. Earnings in 2020 had been negative, so we had a bad second quarter 2020. We had a little bit better quarter here, the first quarter of 21. But as you saw, crude oil prices are retracing, coming down again, and this would be a problem for Chevron as well. So let's take a look at the chart of Chevron. CVX is the ticker. And yeah, that's the most important thing, I guess. We see prices moved up to in the range of $112, $113, $113. Very important level. This last high here, this is the pre-COVID high. And the price just managed to get back to the pre-COVID highs, made a double top up here. If we take this one in as well, it's a triple top here. And we saw this, this wedge kind of chart construction here. And last week prices moved down dramatically, leaving this wedge, leaving this triangle to the downside. Moving below the last support here, and so I see more downside to come for Chevron. My Gush trend indicator was switching to the short side here as well on the weekly chart, and of course we also have it here on the daily chart. On the daily chart we can see it already started to move to the downside in the beginning of July. We have a valid downtrend here. We have falling highs, falling lows. We are trading below the 50 moving average. We are trading below the 20 moving average. Volume is picking up in the down move. So I guess this stock is ready to move a lot lower, at least to this point here, $94, $95. But I guess the higher probability is that this market moves to 85 or somewhere around $84. What we could do is we could take this last range here and take a look at how big this range is. You can do it here with a ruler. That's the range, $12. And we just take this range, put it on the breakout level, and you see price target would be around $88. So maybe you take profits around 88, maybe you want to wait until 84, 85, but I guess the overall trend is down now, and so the better chances for this stock is to move further to the downside and not switching the trend, moving to the upside again. Okay, so that's it for today. This was the last one, Chevron. It would be great to have you all here again on next Monday. We will take a look at how far the markets have gone to the downside before they might move up to the upside this week again. As I said, I'm expecting a bounce at some point of the week, but maybe not today, maybe not even tomorrow. So be careful, take care of your stop losses for your running positions. Be careful when you're building up new positions, and yeah, manage your risk, know your risk, and act accordingly. See you next time. Have a nice week. Bye-bye.
Bye-bye.